Right, we're presented with Sharp Limited's pre-adjustment trial balance. Year end is 31 December. We've got additional information about depreciation. Requirement 1 is the general ledger. Requirement 2 is the general journal. Requirement 3, post-adjustment trial balance. And lastly, just some information for the financial statements. Requirement 4, the amount that will be disclosed in the property, plant and equipment note. So those are my 4 requirements. We're going to start with the first one. It says start by entering the opening balances and the totals and then calculate the adjustments. So we're given these 5 general ledger accounts. So what's the opening balance for vehicles? So because vehicles is an asset, it will increase on the debit side. That's why the plus is there on the debit side. Because accumulated depreciation on vehicles is a negative asset, it looks exactly the opposite of the vehicles account. So the vehicles account is my cost account, and the accumulated depreciation account is a negative account, which is going to increase on the credit side. So let's look at my pre-adjustment trial balance, and you'll see that vehicles has got an opening balance of 268,000 Rand. So we can fill that in the vehicles account on the debit side because vehicles is an asset that increased. So the balance is 268,000 Rand. And that is the balance on 31 December 2013, which is also the year end of this entity. Right, then I've got my accumulated depreciation balance for vehicles, which is a summary and a balance that indicates how much of this vehicle has been used cumulatively. In other words, if you add the usage every single year together, you'll get an amount of 107,200 Rand at the beginning of 1 January 2013. So that's at the start of this year. The balance is 107,200. Right, so we've got our opening balances there, and we can do the same for computer and accumulated depreciation on computer equipment. Right, so I fill in the balance for computer equipment and computer equipment accumulated depreciation. Right, now that we have our opening balances and our opening totals, let's just see if there's any total for depreciation. We don't see depreciation anywhere on this list, so there's no total for the depreciation expense, so we can leave that blank. So we can go to additional information point number 1. Computer equipment needs to be depreciated at 25% using the straight line method. Okay, so that means we're going to use the cost. So if you remember the formula, my formula for calculating depreciation on the cost price is the cost of the asset minus the residual value multiplied by the rate that has been given. So the cost price in this example is the, let's just have a look here, depreciation for computer equipment needs to be depreciated 25%. Computer cost price is 46,000 Rand. There it is, and we've also filled it in there in the opening balance. They did not give us any residual value for computer equipment, so we can assume that to be 0, and the rate is 25%. So we're going to say 46,000 Rand minus 0 times 0.45, and if I use my calculator for that, I'm going to get 46,000 Rand times 0.25, which is equal to 11,500 Rand, and that's my depreciation for equipment. Brilliant. So the answer here is 11,500. Excellent. So now that we have that, we need to prepare our journal entry. for the depreciation. And you'll remember that since we've now used some of this computer equipment for a full year, we need to account for that usage. So we're accounting for the use of this computer equipment for the whole financial year. We've used it. So that's the transaction that we're recording. So for every transaction, two legs are affected. We know that depreciation is affected if we used a fixed asset. So depreciation. And then we know that since we've used an asset, the value of the asset is going to decrease. And the way that we're going to decrease the value of the asset is not by using the computer equipment account, but we're going to use the negative asset account, which is called accumulated depreciation computer. I'm just abbreviating there, but please don't do that in a test or exam. Depreciation is an expense account. All right, because we've used something, it's an expense. Right, what happened to my expense? The expense account increased because we've used more of this asset, and therefore whenever an expense increases, debt click tells us that's going to be a debit. My accumulated depreciation account is a negative asset. All right, and what happened to the negative asset? We've used more of this asset, so the negative asset increased, so that's going to be a credit. You remember, as my assets increase, that is going to be a debit. And now if my negative asset increase, it will be the opposite of when an asset increases, so that's going to be a credit. Also, my depreciation was already a debit, so I know that the accumulated depreciation needs to be a credit. Great, so now we can fill this in our ledger. We know that the depreciation account needs to be debited by 11,500 Rand. We know that the accumulated depreciation account on computer equipment needs to be credited by 11,500 Rand, and we can simply fill in our contra entries. Remember, you can never write the name of the account in the detail of the account, so I can't write here depreciation. Okay, I need to refer to the other account, which is accumulated depreciation on computer equipment. Great, and in here I'm going to write depreciation, which tells me I'm crediting accumulated depreciation account, which is what we said we need to do. We need to credit accumulated depreciation, and I am debiting my depreciation. And here is my debit on depreciation. Right, let's go to the next one. Next one says depreciation must still be provided for vehicles, and vehicles need to be depreciated at 20% using the reducing balance method. So let's go to my whiteboard. So the formula for reducing balance method is the cost minus the accumulated depreciation, which is going to give me my carrying amount multiplied by the rate. The cost for vehicles is 268,000 Rand. 268,000 Rand, and the accumulated depreciation at the beginning of the year is 107,200. 107,200. All of this we're going to multiply by our rate, which is 20%. So you can say times 20 over 100, or times 0.2, whichever you prefer. And we can calculate that. Just get our calculator. And we said 268,000, which is the cost, minus the 107,200. And that is going to give me the carrying amount of 168,000. The carrying amount you're going to multiply by 20 divided by 100. And that's going to give me the final answer of 32,160. Now that is the depreciation for a full year. Depreciation for a full year. Did we have this asset for the full year? Let's just have a look. Well, we're not given any information that tells us differently, so we can assume that we had this asset for the full year. So we've again used the asset for the full 12 months, and thus we do not need to apportion this 32,160. My journal entry again quickly. Depreciation is going to be debited. Accumulated depreciation is going to be credited. Again, for the same reason that depreciation is an expense that increased, and accumulated depreciation is a negative asset that increased. Good. So let's fill that in. Depreciation this time is 32,160. You see, we only have one depreciation account in the general ledger, but we have multiple accumulated depreciation accounts for the various categories of assets. So one depreciation account and various accumulated depreciation accounts. Details here is going to be accumulated depreciation, and important that we don't leave it at that, but that we specify that this is relating to vehicles. Okay, and then in here we've got our credit leg on accumulated depreciation 32,160, and my contra entry is going to be depreciation. And that is my ledger done. We did not have to balance any accounts here, so we do not need to balance or total any of the accounts, so my general ledger is complete. So you'll see that by using these assets and by depreciating them, the value of the asset is actually decreasing. If you look at these two accounts together, the vehicles and accumulated depreciation, the 268 is being reduced by the 107 and the 32, and the value of the asset has been reduced because of the usage, and the same with the computer. Right, now we can look at the general journal entry, and that is very straightforward. We go back to our debits and credits. We see that we've debited depreciation here, providing for depreciation on computer equipment. Debit depreciation, and we credit accumulated depreciation, and we have to remember to write computer equipment. Okay, the amount we've already calculated that, 11,500, 11,500. It's just good practice to enter the debit leg first, so that is also how the question requires you to answer these. Enter your debit leg first. Good, and the same for vehicles. We're going to have depreciation being debited with 32,160, and our accumulated depreciation on vehicles being credited with the 32,160. Right, so my ledger is complete, my journal is complete, and now I need to prepare my post-adjustment trial balance. And you'll remember that the post-adjustment trial balance is simply my pre-adjustment trial balance, trial balance plus or minus my adjustments, which is going to give me my post-adjustment trial balance. Alright, so if we look at our vehicles account, or let's start with computer. Let's start with vehicles. So if we look at the vehicles account, the pre-adjustment trial balance said that my vehicles has got a balance of 26,800. Right, 268,000. Then we made the adjustment to vehicles, which was absolutely nothing. If you look at your ledger, we didn't do anything to the vehicles account as such. The only account that we touched was the accumulated depreciation one. So that's why my adjustment for vehicles is nothing, and my post adjustment figure is going to be 268,000 Rand. If, however, we look at accumulated depreciation on vehicles, my pre-adjustment trial balance gives me a balance of 107,200. Okay, yeah, 107,200. So we've got 107,200, and that is a credit. All right, and then in addition to that, my journal entry, we've got another 32,160 also on the credit side. So I can enter that. So since it's also on the credit side, it's going to be a plus. If it was on the debit side, the adjustment would be a minus, because this was the original balance was a credit. So if we're going to put another credit, the original balance is going to increase. If we put a debit, the original balance is going to decrease. So we say plus my adjustment of 32,160, which is also a credit, and then my final post adjustment trial balance figure is going to be, let's get a calculator, 107,200 plus 32,160, which is equal to 139,360, also on the credit side. So 139,360 on the credit side of my post adjustment trial balance. You'll remember that the vehicles was 268,000 Rand, and that was a debit. Alright, and so my post adjustment trial balance is also going to be a debit. So let's quickly fill that in. If we go here to my post adjustment trial balance, vehicles is 26,800. Accumulated depreciation on vehicles is 139,360 on the credit side. Computer equipment, the cost is going to be the same as the opening cost. So the opening cost for computer equipment was, I think it was, whoopsie, computer equipment, it was 46,000 Rand, and that is on the debit side. If you have a look here, that is on the debit side because it's an asset. Alright, then again, we didn't have any adjustments for computer equipment, so that's going to be 0. So my final balance is still going to be the original cost of 46,000 Rand on the debit side. So let's fill that in, 46,000 Rand. Accumulated depreciation on computer equipment, we started off with 18,400. Start off there with 18,400. Then we had the depreciation adjustment also on the credit side. So accumulated depreciation, computer, 18,400 on the credit side. Then we had an adjustment of 11,500 also on the credit side. So since these two adjustments is on the same side, we can add them together, and that is going to give me my final accumulated depreciation balance on the credit side of 18,400 plus 11,500, which is equal to 29,900, and we can fill that in on our credit side. So we're almost done. 29,900. Finally, our depreciation figure, it was simply these two depreciation adjustments here, 11,500 plus 32,160. So if we add those two together, we've got 11,500 plus 32,160 gives me a final total for depreciation of 43,660. Finally, this question asks us to complete the carrying amount that will be disclosed in the property, plant and equipment note at the year end. And you will remember that the carrying amount is made up of two accounts. So my carrying amount, which is the actual value of the asset, is made up of two accounts. We've got our positive cost account for example, vehicles. And then we've got our negative accumulated depreciation account, which is, for example, accumulated depreciation, specifically vehicles. Right, so let's quickly do the first one. The carrying amount for vehicles is going to be the positive cost account, 268,000 minus my negative accumulated depreciation account, which is 139,360, and that's going to give me a carrying amount of, we have the calculator here, it's the 268,000 minus my accumulated depreciation 139,360, which is going to give me the carrying amount of 128,640, and we can fill that in here, 128,640, which is the carrying amount in my property, plant and equipment note, which will eventually be pulled through to the financial statements. We're going to do the same thing for computer equipment. We'll take our cost minus accumulated depreciation, and that is 46,000 minus my 29,900, gives me a final answer of 16,100 as the carrying amount, which actually represents the value of this asset. So the value of the assets, as you can see, every time is represented by two accounts: the cost account, vehicles and computer equipment, minus the negative accumulated depreciation account each time. And we're done.